Good day, everybody. This is Mike Zuzolo with your Tuesday, July 2nd grain market update. A much quieter day on Tuesday compared with Monday's session as pre-holiday trade, thinning volume, plus less basis excitement, especially in the corn market, created a more calm price action for the grain pits on Tuesday. July corn gained back some of the premium against the new crop December as interior basis and cash prices stabilized. July was the leader on the session for the whole grain complex on Tuesday. Although Gulf corn basis did drop about 20 cents on Tuesday morning, and so that probably kept some potential old crop bulls on the sidelines. That's why we didn't make up all of our losses, I think. It was a little bit surprising to me that the new crop corn didn't do a little bit better than it did, given that the midday weather models brought back a western corn belt ridging pattern for next week. This included the areas like Nebraska, Iowa, Lexington, Nebraska could be seeing temperatures close to 100 degrees by the end of the weekend. So it was kind of interesting to me to see that the July D's corn spread continued to work really well, given that better, more bullish new crop weather update. Places like Lexington, does show maybe later after next week, midweek, Tuesday, Wednesday, maybe the temperatures back down, so maybe that's why the trade didn't want to bite into that apple quite yet. Wheat was a disappointment to the trade on Tuesday, I think to the bulls especially. Overnight double-digit gains could not be repeated, even on the opening on Tuesday morning. We did see Egypt coming in with a surprise tender for 180,000 tons of soft red wheat. Didn't keep the market enthused, however, because it was sold to Egypt by the Black Sea, Romania, and some other Black Sea countries. Prices were right around $250 a ton, not far from where our Gulf price is. So while the prospects for an overthrow of Egypt's government may be looking promising for a return to more normalized trading with the United States and maybe a more normalized wheat trade, and with the U.S. getting some more business, traders also noted that the dollar was up sharply on the same kind of political uncertainty and safe haven buying, so that kind of offset the bullishness of the wheat tender. We didn't see Kansas wheat harvest going from 8% to 57% in 1 week as a reason to see short covering by the funds either. That was a little bit surprising to me as well, given that they went through almost 50% of the harvest in 1 week, which suggests to me they probably do have some lower yields and they're really cutting through that wheat very quickly as they progress. That's it for now. This is Mike Zuzolo. Please remember, go to globalanalytics.biz, and that there is substantial risk of trading futures and options. The impact of cycles or current events on prices may be already reflected in futures.